Another beautiful day today of volatility, and I want to talk about just like not getting frustrated and being patient. So as you can see in this area earlier today around 1, I thought we were going to break through, but we just kept rejecting this level. Got stopped out. I would buy 3 contracts, I'd get stopped out for a little bit of profit, buy some more, get stopped out, and then I was like, all right, we're wicking here. Sold a couple contracts, took some decent profit down here. However, just couldn't really get anything going. We were chopping, so I took some time away, and I was like, all right, where are we likely to reject based off of the price action that happened today? So this is where, when you zoom out, yes, being on a 5-minute chart helps, but it also gives you clues throughout the day of where sellers are. So what do we see here? I sold 5 Nasdaq contracts in this level because we previously had rejections here. My stop was above this high. As you can see, we never got above that high. And then I took profit back in this area where we had some resistance and I expected it to be some support. So we previously had some support here and we had some support here. So as you can see, I exited my 5 contracts here. So I got short at 196.90 and I covered at 196.58. So as you can see with this account, we locked in over $4,000 of profit today. And this is something that repeats itself each and every day. So always just be patient. And what I've found is if you set orders to sell on the chart and then let price go to that area instead of just joining the market or instantly hopping in on some FOMO, because you could have seen this rejection and you could have marketed in here and then instantly 10 points in the opposite direction, to where if you set your order with your appropriate amount of stop, and that's risk is dependent upon each person. My risk and your risk can be completely different. I like to risk less than 10 points to make it at least 30 points. That's just kind of what I found to be optimal for me. So I'm risking 1 to win 3, so my win rate does not have to be that high. I think I average right around a 70% win rate currently. Working on that a little bit, always trying to get better each and every day. That's one of the best parts about trading. However, what do we see here? This area is clearly important. Why? Because when we tried to break above it, we got rejected, hung around that area. Eventually, once we broke it, we had huge volume spike to the upside. After that, we came back down. We couldn't break below it. When we finally did, we absolutely flushed. So what do we see? Rejection, rejection, rejection. We eventually broke through, and once again, straight to the upside. So this is a key level right here. Like this 196.50, I would keep watching that. If we hold this, we're likely to retest the highs. If we break below this, we could definitely retest the lows today. But as you can see, this is where I got out. Not thankfully I did, because we're starting to retrace. If we look over at the 15-minute chart today, we get a little bit cleaner of a picture. We saw today that we had around 11 o'clock this high, and then we came back when I went over the trade previously. We came back into that area and rejected. So this was a double top, one of my favorite patterns that I like to trade on a day-to-day basis. However, something to look out for the rest of the day is typically we don't triple top. Usually if you get a double top, sometimes you can get a triple top and a rejection back down. However, usually volume will start to increase and we'll break this level and start to head back higher. So that's definitely something that I'll be continuing to watch for the trading day tomorrow. Like I said, I'm done today. Don't want to give back any profits. I've made my fair share of over trading and giving back some of the profits that I earned during really good setups. So definitely don't try to do that. In general, on the 15-minute, you'll get the clean picture of where momentum is heading. So I always have my 15-minute charts right above the charts that I use to enter and exit my positions. And this is kind of something that can prevent you from making big mistakes. Like if you saw this huge, this is a bullish candle, we come up here, but then you look over to the left and you realize, okay, we previously had some resistance, so maybe I should wait to enter. In other potential scenarios, we could have broke through that level. You don't want to enter when you're breaking through. You want to enter when it comes back and it retests that level. So it's kind of like what we saw here. We broke through, came back down, we broke again. I would not. Some people like to momentum trade here on these candles. That's not me. I like to wait for the pullback. And you could have had a long opportunity here when you came back and you retested this level of previous resistance, now turn support, and you could have caught 50 points to the upside. So always look for these break and retest levels. Make sure you have a risk to reward. So if you're getting in below this level, then your stop can be at the low of that candle, and then you can kind of trail your stop up as it heads in that direction up toward that double top area, which would be where I'd kind of set my profit target there, expecting that we'd have some kind of resistance at some point because there was sellers there previously. Now, also what you can do is you can pull up the hourly time frame and you get a little bit of a different picture here. So you can kind of see we're in like a bit of a downtrend. So looking at this, maybe we are expecting to retrace off the 50 EMA and head lower throughout this week. Regardless of what direction we go, I expect a lot of volatility, so definitely play it safe, keep your risks small, and let's get these payouts.